Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video. Today's date is May 2nd, 2024. In the Kickstart video, I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. All right, we're a day after the FOMC rate decision. The Fed kept rates unchanged. Chair Powell was a little bit more, let's say, dovish or less hawkish in his comments, saying that he doesn't expect that the next rate move will be a hike. That took that off the table, at least for now. We know how that happened, what happened in the last meeting when the Fed still targeted 3 cuts and then quickly started to backtrack in the interim between the last meeting and this current meeting as the data came out stronger. So, it's all up in the air still, but nevertheless, the Chair Powell was a little bit more dovish in his comments. We did see the U.S. stocks move sharply higher off of that comment, but then started to come down sharply after his quick Q&A, and the broader indices did end lower. Today we are seeing a rebound in U.S. stocks. We're seeing U.S. yields mixed with the shorter end higher and the longer end, actually the shorter end lower, and the longer end a bit higher. So a steepening of the yield curve. And in the euro versus U.S. dollar, getting back to the technicals that I promised, I'm looking at the hourly chart here. What's the price action we saw yesterday? Well, we saw the roadmap play out as expected, I guess. The price initially did move to the upside, breaking above the 200, 100-hour moving averages. This was off of the more dovish comments. And the price moved up to this swing area through here where we had a number of different swing lows and swing highs going back in time. Outlined this in previous videos. Especially through here where the price ceiling was reestablished before the FOMC rate decision. So we moved up into that swing area between 1.0722 and 1.0734. We rotated back down into the close, and in trading here today, what have we seen? We saw the price again move back into this swing area into the early European session before moving to the downside. We did have PMI data, which was somewhat mixed, but still well below the 50 level for most of the countries there, reminding everybody of the weakness in that country and tilting the bias, I guess, more, or in that region, tilting the bias a little bit more to the downside. Nevertheless, what have we found? We found the price moving averages, which are now converging, so far holding support. That area comes between 1.0695 and 1.0699, currently trading at 1.07, nice round number. We're also on this old trend line right here, which has done a pretty good job. We broke below it here and then used a level as resistance here and here before breaking back to the upside, of course. The 200-hour moving average is also around the same area, so that helps out as well. But needless to say, we're going to need to get below the 200-hour moving average and stable level to increase the bearish bias to the downside for this currency pair. If we do hold support, then we have this swing area up here to continue to fight the good fight. And above that, the 50% retracement at 1.07425. That's of the April trading range from this high to this low right here. So staying within this range right here. By the way, the low price yesterday did come down to the lower end of this trading range. So we need to get outside. We'll wait for the next shove in this currency pair. We'll see if it comes today. We do, of course, have the U.S. jobs report tomorrow to deal with, which may give the catalyst for the next big move for the U.S. dollar, for the euro versus U.S. dollar. The dollar versus yen, now that was an interesting pair. And price action during Fed Chair's speech, we saw the U.S. dollar versus yen move lower, but note how the price respected its 100-hour moving average here and bounced modestly to the upside. That's swing area, also near the 157.23 level was in play, but the price because the 100-hour moving average is so close to it, the price traded above and below that level. That was until we broke through the 100-hour moving average right here and continued its run to the downside, breaking below the 200-hour moving average. Really, the dam was broken, and we saw the price move sharply to the downside. There was talks, and I don't know if it's a confirmation, but looking at different accounts in Bank of Japan, it seemed like the Bank of Japan did intervene, and that took the price below this swing area through here. Of significance is how the price pretty much held the 100-hour moving average here before running to the upside here. Of course, there was that squeeze, and then the intervention took the price right back down to this swing area through here where the market found support buyers and trading yesterday. The price did fall below those levels, and like it often or sometimes does, I guess, the price came right down to a nice big round number at 153, where the price rebounded back to the upside, moving all the way up to above the 156 level here, and also back above the 200-hour moving average here for a few hours during the Asian session, but then tilted the bias back to the downside, and we saw more selling, and we are trading back into this swing area down through here, which was the base before moving to the upside. That area comes between 154.39 and 154.87. We'll see if the buyers come in like they did right here in this area and push the price back to the upside, or are the sellers now in more control and will look toward lower levels in the dollar versus yen. Going to the daily chart, we can look at where we've been and where we are, and a further move to the downside would have traders looking toward the 151.909 level. That was at this ceiling area through here. Not only do we have 2022 high near that area, but we also had 2023's highs near that area, and 2024 formed this ceiling right through here before breaking to the upside. So be aware of that 151.86 to 90 area on downside for the dollar versus yen. Break below that level opens the door for opens the door further for selling pressure in the dollar versus yen after the sharp rise, a tick in the price to highest levels going back to 1990. Finally, let's take a look at the sterling versus US dollar. And like the euro versus US dollar, played to the roadmap fairly well. The price traded higher, running into the resistance against the 200-day moving average. That was the same resistance that we found in trading on Tuesday's trade as well, after we broke back below it after this brief break above it on Monday and into early Tuesday. Price came up to that 200-day moving average, found willing sellers, came up to it yesterday and found willing sellers as well. And trading here today, like the euro versus US dollar, tried to go higher, but remained comfortably below the 200-day moving average and started to rotate back to the downside. We're currently back below the 100-hour moving average. It comes in at 1.2516, and that's going to be the resistance now for the pair. And we're testing the 50% midpoint of the April range, right at the 125.03 level. It's also near the natural support at 125 level. So break below that 50% retracement would be more bearish in the early New York session, and we'd look down toward the 100 and 200 bar moving averages down here. That's the 100 bar moving average in the 4-hour chart. That's a 200-hour moving average. Both of those are near converged at the 124.78. So that would be the next target after breaking, if we break below the 125 level. Conversely, if we move back above the 100-hour moving average, we start to see more buying. We should see more buying. After all, we tried to hold support here and then held resistance here. That would the 200-day moving average would come back and play along with the 61.8% retracement and the 200-bar moving average on the 4-hour chart. So that's my technical look at the three major currency pairs. Kickstart your trading day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.